Good morning. It's May 17th. Ron and I are here to go over several topics with you. I have a license agreement with Ron to utilize his materials. The agreement requires me to share this notice. I do have his written permission to utilize his products in this manner. And here's our disclaimer. We've gone over this every month now. You could probably read it just as well as I could, but basically it tells you that nobody's giving anybody advice today. It's strictly educational and informational purposes only, and you alone are responsible for how you evaluate and utilize the information. Talk about the current vision status. We'll go over the market forecast and then cover the first quarter results. Current version is H. This is still the chart from last month. We've still beta testing a version HH, and now Ron's actually got another version that he's testing. I don't know, Ron, if you call it HHH or
No, it's going to be I.
or little I
Right, we'll
or
go to I.
beginning I, but anyway, Ron's actually made improvements to the HH version, and plans are underway to release this new version I. I don't know how soon that's going to be, but that's in the works. And with that, Ron, you've got the market
Take
forecast.
a look at the forecast. How are we doing? What's happening? Well, as a reminder, here's what we selected at the beginning of the year. Interest rates, we said we're going to be flat, and they are flat. I mean, Powell is getting a lot of pressure from the president to start lowering rates, but he's resisting, and we'll see what happens going forward. But I think flat's probably a good selection. Unemployment rate up. That was our view way at the beginning of the year, and it hasn't moved. It's pretty still, pretty flat. It's not gone down. So will it move up before the end of the year? It's possible, but this is the one I think that it maybe we're off. Maybe it should have been flat, but we'll watch what happens. Price of oil down, yes. Oil has moved down. GDP growth rate is flat until we get maybe the impact of all this new investment. That might change down the road, but it takes a long time. U.S. dollar stronger. It's the first year of the presidential term. Consumer sentiment flat. Reports out that maybe it's down a little bit, but flat is probably still a pretty good indicator. And then our Sedgwick chart, C to A to B. So those settings gave us this forecast.
Oh, that's last year's
Well,
forecast.
this is last year, just to demonstrate that the forecast we had last year with the factors as shown there, the actual and the black is actual, the blue is the forecast. So we did really a good job in selecting the factors. It's the factors what makes the blue line move forward. So when you change those factors, the blue line changes. So those were the settings we had for last year. And now, based on the current settings, here's the forecast, the blue, the actual is the black. Well, we were right on until the beginning or the middle of March into April. We were, the forecast was, the actual was right on the forecast. And it forecasted that dip right in the blue line, but the actual was much more severe. And really, I think the tariff shock was much bigger than the elements that we have in our forecast. So, but it's recovering. So we might in a month or two get back to the blue line, and if it does, it's an upward cycle for 2025. That was the S&P 500. Here's the NASDAQ. You can see that the NASDAQ has actually already moved above our current forecast, so it's recovering a little bit faster. And maybe it's partly the technology stocks that are, they're pretty big weight there in the NASDAQ. So they're moving up a little bit faster. and the recovery is a little bit faster on the big downturn, the tariff scare, so to say. So we'll see what goes forward, but the forecast suggests, a fairly nice upturn. If we look at what's happening in the short term, next 50 days, here's outlook. Going to move up into May or into June. We're at May, moving up into June, and then a kind of a little correction in July, and then back up. So, the short term also suggests that we're still in a recovery state, and it's going to take another month or two before we move into the next phase, which would be a higher up on the market. So that's where we're at. We're looking at what's happening down the road. I mean, the whole tariff thing is going to take some time to get baked into the numbers, but the stock market has already maybe moved a fair amount, but it's just based on what's been announced. So every day or every week there'll be more announcements, but it's really probably not going to affect the market a lot. There are other factors that are probably going to affect the market. And I think the unemployment rate, if all this investment causes, really more jobs, the key is are the people available to take those jobs? Are they, do we have the right workforce available, currently? So, I mean, all of these people that came in the last 4 years, I don't know if they're really qualified. So that's a problem. We're not educated. They're, laborers, but we need people that, I mean, if we look at what people are investing in, all this AI stuff, all these data centers, all of this information processing that's going on, we need, smart people to work with that. So do we have those available in the workforce? That's a big question in my mind. So the unemployment rate's not going to be affected, but the investment and the expansion that's being forecasted may not be there because the workforce is not at the right level. It'll take a couple of years to, build and rebuild the workforce with the right skills. And then we have the geopolitical events that are happening. Iran, what's going to happen there, and then the whole, Ukraine and Russia. Will that get solved? It's slow go.
Any
Well,
questions?
the question is hanging over. I think everybody's. I don't know about you all, but for me, I think it's the thing that's hanging over is concern about competition with China and war with China.
Well, yeah, but I say the war would be with Taiwan. I don't know if China
Yes, that would be
is
how it
going
would
to,
start. That would be how it would start, wouldn't it?
right. That would be a difficult situation if they, decided they're going to take over Taiwan. That would be a major blow, I don't know, if the US really would be able to defend them. We have, a lot of ships and military, but, it's very difficult because it's so far away.
Well, and they're spread over other places.
Yeah.
So.
Any other questions?
Other than China is now, they're trying to work out trade deals. I just think these tariffs is nothing but a chess game that's between nations, and ultimately it will get worked out.
Oh yeah, it'll get worked out. Yeah, I think, they already have, they've been shocked. I mean, they turned around ships. The number of shipments, going to the US has gone down, and they're already seeing it in their factories. So
Yep.
that is already happening. So the only way to correct that is to get an agreement on the whole trade situation. So,
No, you can't buy an American car that doesn't have parts made from other countries.
well, that's, yeah, right.
Yeah, and that's just one item. Just
Yeah.
so much of everything we do, we get stuff from all over to put it together.
Yeah, and it'll take time to bring manufacturing back to the States. And of course, then, like Ron was saying, you've got to train up a labor force that's going to do that. And
Right. If you
Well,
look at, what
uh,
just happened in the Middle East, I mean, Boeing got an order for what, 200 planes, big ones. Okay. Now, can they execute? Can they actually deliver them? That's the issue. Do they have the workforce? Can they add to the workforce? I mean, Boeing has really stubbed their toes all over the place, even with with the NASA work. They're going to cancel. You got a $4 billion contract, to put men on the moon again, and they can't deliver. They can't deliver.
well,
Sad. I mean, I don't know what happened to them, but they just kind of lost their way of delivering what they promised they could do, and it's just terrible. Even like the Air Force One. I mean, those 747s have been producing them for a long time. I mean, Trump ordered it in his first term 4 years ago, 4 or 5 years ago. He ordered those new planes, and Boeing can't deliver. Come on, I don't understand what the heck's going on there.
that was a retrofit of two existing planes. And I read an article this week, and it was talking about what you said earlier, Ron, which is skilled laborers. The skilled laborers were not there. They've had retention of staff problems, and the whole culture of Boeing has been over the 737 Max that really caused a whole lot of
Sure.
internal strife, and they've just not recovered. And the other thing is, I don't think they've pivoted to keep up with the current times. They're still in that old mindset of study it, so it doesn't make an error. And you
Right.
got Elon out here saying, I'm going to launch as soon as I can, and whatever goes wrong, I'll fix that.
Right.
And let that govern your pace of innovation. They're not innovating.
Yeah.
Yeah, I think I read the same article that said that the corporate culture has changed at Boeing, and it's become run too much by, bean counters.
Well, the other problem all industry is having, the younger generation doesn't want to go to work.
Yeah, right.
They want to have some way where they can sit home with a computer.
Sit home.
You got that right.
well, we are really counting on reshoring. Our GDP here depends 47% on manufacturing, mostly biopharma medical devices. We have all the major ones here in the island: ABB, Merck, Johnson & Johnson, Pfizer, and we have a big engineering schools. And so we are ready. If there's an opportunity to bring back some of those drugs back to manufacturing, we're ready to manufacture them down here. We even manufacture Viagra for the U.S. So it's a big pharma, big manufacturing operations here in the island. The island that depends only 10% on tourism. It's highly industrialized. So we are ready to take over the challenge if those industries come back to the U.S.
Yeah.
Right.
Okay, good topics, good discussion. Anything else?
Well, and I fortunately, Lehigh, which is just south of Salt Lake City, that has become the new technology center for, instead of in California down there, the factories that are being built. It's unbelievable. And it's all for, computer chips, everything else.
Right.
Yeah.
And that's all happening here.
Well, there, then in Texas, right?
All right, let's look at first quarter Trade Alert Service performance. Just a quick reminder of what the current fundamentals are that we're using. It's stocks with options. Then we have chosen revenue per year at 500 million, greater than 500 million, market cap of greater than 750. The revenue growth per year, we've lowered that from previous times, allowing now a minus 5%. We still want to see our preferences for there to be positive revenue growth, but we've had to open that up just a little bit to keep our candidate level high. But we tightened up on the earnings, and we're looking for all four quarters to be positive. Volume of greater than 500,000. Bear cash, we also have loosened that up quite a bit, recognizing again what took place for several years when interest rates were so low. A lot of companies took on debt, and even though they're operating well, they still have this negative cash that's on hand. So we've loosened that up quite a bit. Those are the items that are in the book. Outside of the book or below the line, for our Trade Alert service, we keep the stock price less than $125 a share. We utilize only weekly options. And then we have some personal preferences in eliminating the foreign stocks, tobaccos, the REITs from that. And then we add in ETFs. The ETFs that we add in are the ones that have the weekly options and again are priced less than 125. And so that's where we're at on the fundamentals. In terms of the performance, there were 13 weeks this quarter. We skipped a week, so we only have 36 trades accomplished. It's good to say that we had 33 that were profitable. That profit generated $2,478. We had one loser, and it was quite a large loser, STX. It lost $2,179. I will say on a side note, had we kept selling the deep out of the money calls, or as you might want to say, long out of the money or far out of the money calls, we might have fared better. As right now, today or Friday, it's currently trading about $5 above the purchase price. So had we stayed in it for a longer period, we might have recovered that for a profit. But as it was, we exited that for a loss. We closed 4 trades, which were held greater than the initial 7-day period for a profit. We still have 2 trades open, TSCO and BHC. So 81% of the trades were ended within the same week that they were opened. We'd like to keep that high because we know that the greatest profit margin is achieved on those 1-week trades. So 36 trades is a 94% closing rate. We'd like that to be high in the 90s. The win rate is the ratio of the winners to losers, and that's a high number. The weekly return looks at the capital required for all 36 positions, the total days of those positions, which was 496 days, and the profit from those 36 positions. As I said earlier, the longer we're in a position, the lower this percentage gets. So we've learned that it's better to keep the holding time of positions very short. Average return does not take into account the holding time. It's simply the profit divided by the capital. And then the total return takes into account the average capital, which is our position size, and the average time, which is the days that it's held. And so considering a 3-month period, the total return is 5% for these covered calls and cash secured puts, which is well within the standard of 2 to 4% that we see historically taking place. And so as we always talk about when we're looking at the performance, we want to remind you that Ron and I do additional due diligence in selecting the equities. We don't solely rely on the VTAM signal. We plan for success, and in doing so, we focus on in-the-money calls and at-the-money calls because they have a higher probability of success. All successful trading rules include taking losses, and we certainly took a big one this quarter. And then planning for the exit. Know your stop loss point, have a strategy for mitigating those losses. We may not have done that as well this time, taking a big loss on STX, but we certainly wanted to exit that before it went much longer. You never know what the future is. So with that, any questions over the performance?
I guess just to note that you got to, the market was down in the first quarter. So we had 5%, which is positive, right? So got to look at that situation too. What did the market do during this period of time? So we had that big drop. It's just about recovered now. So we're back to even for the year, but we had a positive 5% return for the first quarter.
Yeah.
Yeah, and that win rate is terrific.
Yeah, I think we were doing good. So certainly optimistic that second quarter is going to be even better.
Going to be better, yeah.
Most likely will. Okay. I do
Good
want
job, Tommy.
Thank you. I do want to cover briefly about the MTV AID snapshot that we rolled out last time. What the service is providing, first off, we run the Visions algorithm every day for you. So this reduces the overtime, your overhead, and time and effort. You're able to focus in on the signals that it's producing. It did produce in the past month 116 buy signals. I think the key thing, though, is this third bullet. We tightened up the fundamentals. The fundamentals of the equities we're using are closer in alignment with the book criterias. So they're much tighter than the trade alert is using. And we loosened the stock price. A lot of people had said, I'd like to see stock prices, equities that are greater than $125. The Netflix, the Teslas, the Apples, the Microsofts. So you get those with this service. So you're able to watch for those. And then the other thing is that, as we've heard from Bob talk about a lot about using monthly options, the list of equities used in this service is a combination of weekly options, monthly options, and there's a few that have daily options. So we've opened up that option criteria to where it includes the monthlies. And next month we'll do more detailed performance numbers where we'll look through what the buys were and the sells were that took place within the month and help you understand what's the part of the value in there. Just as a reminder, you can try it for free. Normally we offer this for $100 a month, but for current subscribers to Trade Alerts or the combo subscribers, we'll do that for just $50 a month. There's a 10-day free trial that we offer. If you're interested in that, then just send me an email and we'll get you into the free trial to that. Okay. And that ends.
And that, just a reminder there, Tommy, we're sending out a daily list at 10 o'clock. So that's what the service is basically provide them opportunities, and that setting or that recommendation or or factor that comes out is based at the 10 o'clock price, right? I mean,
Right.
we've always said, you want to wait for the market to open. There's a lot of orders. Sometimes things are jumping up and down. You want to give the market a chance to settle down. So that's where we chose the 10 o'clock period of time to say, okay, what are the opportunities right now at 10 o'clock? And if you look at the chart, basically you take the Visions chart, add the price at 10 o'clock, it'll tell you what the signal is, right? So
Right.
that's why the buys turn up at 10 o'clock. Might be a little bit different from the day before. Maybe the stock closed flat. Now it's up, and so it gets that extra points in the V, and it says a buy. So that's
Yeah,
the
and-
important thing to realize. It's based on the 10 o'clock price.
and that's a key point, Ron, because when you created Visions years ago, it was primarily a tool that you used after the market closed, studying your plan for the next day, doing it that night or that morning before the market opened. Visions hasn't really been optimized, I don't think, for real time during the day signals, but we've created that at this point.
Right.
And so the algorithm does work. And as we pointed out last month, yeah, at 10 o'clock, it may be up and it may issue the buy signal. You get the jump on things at that point. Maybe even if it pulls back during the afternoon and it's not a buy at the end of the market day, typically we've seen within a day or two that buy signal shows up with using the closing price for the day. So the MTV AID process actually helps you get a jump start on many of the positions that are out there and how they eventually show up.
Yeah, and you can't tell which ones are going to pop also, because on occasion, I mean, yeah, they might turn around like like the one for yesterday wound up being down like a little more than 3%, but I saw a day last week when one stock was up like almost 10% if you got in at the time. You
Yeah.
just can't tell,
Right. And sometimes you'll see a stock that'll kind of take off in the morning and it just keeps growing and growing and growing, and maybe it peaks around noon or 1 o'clock. The signal that comes out, it says it's a buy. Then, like you say, sometimes you could make easily a percent in a day.
Mm-hmm.
If you were swing trading and day trading it, but that's not really what we built it for as a day trading tool. It stays with the Visions algorithm, and which is based upon a gold score for the entry price, the entry point, and then the exit point is based upon a sell on gain or sell on loss.
Yeah.
And
A couple of guys I know that tried day trading lost a bunch of money doing it.
yep,
That's a
Very-
bad
very
bad play.
very
Yeah.
difficult. Okay. Any other questions or comments today?
Just that I've been real impressed with it so far.
Oh, so have I. Well, I've been real impressed with the whole damn system for a long time.
Yeah.
Long time, Bob.
Long time.
We did this month, we did add a column to the daily email that says whether it's a monthly or a weekly option. So when we showed you last time, last month, when we rolled this out, it didn't have that. I think, Charles, you asked for that, and so we added that to the output. So
Yeah.
so you, and I meant to ask you, I looking at the output, it comes out alphabetical by signal. But I didn't know if you wanted me to group the monthlies or the weekly options, make that by option type, or just leave it alphabetical.
I would just leave it alphabetical, because what I do is I sort through with the existing list, double check positions, and that's a more
Okay.
useful sort for me than whether it's weekly or monthly.
Okay, very good then. We'll leave it the way it is. Any other questions, suggestions? Hearing none, I hope you all have a great month, and we'll see you in June.
See you in
Yes, you
June.
will.
Thanks.
Take care. Thank
All
you.
right, take care.
Thank you.
Bye.
Bye-bye.